Welcome to the Daily Insights That Matter. The benchmark Nifty just broke the 20,000 mark for the first time this Monday. Now it's a remarkable milestone and it's got everyone buzzing. Meanwhile, the BSE Sensex also had a fantastic day, closing 0.79% higher at 67,127.08. Now that's a record high, surpassing the 67,000 mark for the very first time. Now these are indeed exciting times for the Indian stock market. Now here's an interesting tidbit for you. It took the index a total of 51 trading sessions to climb from 19,000 to the 20,000 level, while it took a total of 425 sessions for the market to hit 19,000 from the 18,000 levels. Now what's really fascinating is that the Indian markets are on fire even in the face of global recessionary fears, crude oil prices crossing the $90 per barrel mark, a stronger US dollar, rising bond yields, and the talks of the markets being overpriced. So what's really driving this rally? Let's break this down for you. The first is the G20 optimism. The G20 Delhi Declaration and India's diplomatic success have injected a lot of positive energy into the market. The inclusion of the African Union in the G20 and the proposed India, Middle East, Europe corridor are seen as economic and market boosts as well. We'll be delving into the G20 developments in detail in this week's Third Empire, but it's clear that these positive cues are giving the stock market a boost. The next is the positive domestic cues. Despite various challenges, the Indian economy is showing some serious resilience. The fresh rally can be credited to favorable domestic cues like strong GDP numbers for the first quarter of FY24, the robust GST collections, and the promising PMI or the Purchase Managers Index for the month of August. Investors are also banking on the long-term growth story of India. The next is the FII trends. Foreign portfolio investors had a bit of a rocky start for this year, being net sellers in the month of January and February, pulling out almost 34,000 crore rupees. However, they quickly shifted gears and became net buyers. September has been a sort of a mixed bag, with FPIs pulling out funds in the first 10 days of the month. But if we look at the larger picture, since last year, FIIs are back in the Indian equities game. The next is the growing domestic participation. Yesterday, we spoke a lot about the rising number of demat accounts in the country. Now, it's a clear sign of growing optimism and confidence in India's economic future and a greater awareness of equities as an asset class. Now, interestingly, in recent days, domestic institutional investors have been pumping money into the markets as well. Now, all of these factors are pushing the Indian benchmark indices to newer heights. As the market continues to surge, it's not just about numbers, it's a testament to India's economic strength and its relentless pursuit of progress. With each milestone, the Indian stock market is offering investors untapped potential and unprecedented opportunities. Now, it's an exciting time to be a part of India's growth story. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com